In today's video, I'm going to share with you some financing options for building a custom home. There are a lot of factors to consider, so whether you are a homeowner or a contractor, this will be very helpful for you. All right, the first step is that you need to have land to build your custom home on. And ideally, you own that land outright. In other words, you are mortgage free on that piece of property where you are going to be building your home. What this will allow you to do is borrow against the value of that property so that you can start construction with that money. From here, you really have three options. So option number one would be to stick with a conventional bank. So typically, a lot of people like to go this route because it's convenient. They already have an account there. They have a relationship with whoever they're dealing with at the bank. They can consolidate their debt potentially. They're keeping it all in one location. But the downside is that you have a very strict withdrawal schedule, and I will get into that shortly. Option two would be to work with a mortgage broker. Now, a lot of mortgage brokers can work with conventional banks if you already have a relationship with a mortgage broker. However, they will have alternative options for you as well. And what this allows you to do is actually have a more flexible withdrawal schedule. I will get into that just like I will get into the more fixed withdrawal schedule that the conventional banks offer. The other benefit to using a mortgage broker is that you might be able to work it into a one-time mortgage right after without having to go through that step of setting up the new mortgage. So they may give you a fixed fee once the house is complete, just goes right from that construction mortgage into that new home mortgage, and then you have that fixed rate for 5 years. Option three would be to go with a private lender. Now, often you do have to get to these private lenders through a mortgage broker, so you can talk to your mortgage broker about that. However, the downside is going to be that you're going to pay higher fees, you're going to pay a higher interest rate, but you may be able to borrow more if that is what you need. All right, there are a few upfront fees that you should be aware of as well. So when you're going into this construction mortgage, you're going to have an appraisal fee, you're going to have potentially lender fees depending on who you're working with, and you're going to have a lawyer fee as well to sort through all of this. Now, during construction, you're going to have interest-only payments on whatever money you have borrowed. So you're going to have draws throughout the construction process, and then you'll pay interest on that amount that you've accumulated up until that point. And draws, they can be taken out depending on the option that you went with, and I'll get into that right after this. But for example, if you need to get money for your windows, or you've paid for your windows and you're expecting to get money back for those, keep in mind that you will have to have those windows installed. It's not enough to just purchase the windows. You actually have to have the windows installed before the appraiser is going to come to site and check off on that being done, and then the bank will release that money to you in order to pay for that. All right, so here's an example of a conventional bank draw schedule. The process is divided into 5 payments, and each payment stage consists of several benchmarks. Now, as a builder, right off the bat, I do see some issues with this. For example, they're asking you as stage 2 to have the insulation and vapor barrier installed. However, typically, you're going to have rough-ins done before you can do that. Specifically, you need to have your electrical done. Now, it depends on your assemblies, and we're not going to do this video about how to build wall assemblies and where things can go and so forth, but typically you're going to have your electrical put into your walls, and then you're going to have the insulator come and insulate everything and put the vapor barrier up. So right off the bat, I'm seeing some issues with this draw schedule. This is also where it gets difficult with high performance homes, because percentage wise, you're going to spend more on your envelope, i.e. your windows and doors, your air sealing, your framing, your insulation, than you will in a conventional home. So you'll need to have some additional costs because the bank is likely not going to cover what you need in order to pay the bills to build your home. Now, with the conventional bank, these stages are non-negotiable. You have to hit those benchmarks. The bank comes by, they say, yes, you've completed them, and then they release the money. If you haven't completed them, they will not release the money. Also, keep in mind that they're giving you likely 80% of the value of the completed home. So you need to make sure that you have that accounted for in your financials as well. Now, here is a typical appraisal checklist that mortgage brokers use for their draw schedule. If you own the land outright, this will get you your first draw, and this draw will be a maximum of about 65% of the land value, but only max of 5 acres. So that means that if you have 100 acres, they're not going to give you 65% of the 100 acres. They're going to look at 5 acres, what is that worth, and loan you money based on that. Now, each preceding draw is a percentage of what you see in this schedule here. And once again, it's going to be a maximum of 80% of the final appraised value of your completed home. Now, the main advantage to this is that you don't have to wait until you hit a benchmark. You can call for a draw whenever you need it. That means that the appraiser will come by, they will look at the checklist, they will check off whatever's done, and based on percentage, they will release that money. Well, it will get released through your lawyer and so forth. Once again, though, we run into some issues with high performance homes. It's the same thing. The percentages don't line up with what you actually need to build your high performance home. You're going to have more money put into the envelope portions, and you will have less money percentage wise put into the rest of your home. The final thing I want to say is that custom homes are not for the faint of heart. There is a lot of work required, and it's going to cost you more than what you can borrow from the bank, assuming you're hiring a general contractor or a custom home builder to build that home for you. If you're doing it yourself, that's a different story. You're gonna have a lot of sweat equity put into it, and you're gonna have some cost savings, but you're also gonna have a full-time job for who knows how long. It depends on what you're building, what you plan on putting into your home. However, you need to take that into account when you're building your financial model for your home. It will cost you more than what you're going to get if you were to build that home and sell it. Now, that being said, you do get everything you want. That's the point of building a custom home. So anybody who's building a custom home typically doesn't plan on selling it within the first year or two. They're building it so that they can grow into it, so they can be there for years. And when you look at it from a long-term investment opportunity, it is a great investment opportunity because you get everything that you want. You get to enjoy it for as many years as you want to be in that home on that piece of land. If you want to learn more about how much it costs to build a custom home, you can watch this video here. And for our US viewers out there, I have a great opportunity for you. If you're looking to save thousands of dollars on your utility bills over the coming years, this is the opportunity. I partnered with Freedom Forever and Apricot Solar in order to bring solar power to your home. You can see if your home qualifies by going to thecontrabuilder.com/solar. Once again, that's thecontrabuilder.com/solar. Put in your information there and I will personally get back to you. There's never been a better time to get into solar because solar has come down so much in price, about 50% over the last 10 years, and because you have great incentives in the US, there is a great opportunity for savings. Once again, that is thecontrabuilder.com/solar. Until next time, I'm Casey Gray, and remember to live consciously.